I'm Catherine. I'm with eXp Realty. I'm on Julian Himes' team. We are one of the top teams here in the Ottawa area, and I'm so happy to be here with Dee Ann Marcoux, mortgage broker. She's at the broker level. That's the top of the chain, is it not, Dee Ann?
Right.
That's what you want in your mortgage professional. Dee Ann, why don't you introduce yourself?
Yes, thank you, Catherine. Thank you for having me here. My name is Dee Ann Marcoux. I'm a mortgage broker with the Mortgage Advisors here in Ottawa. And I'm really honored to be here with you today, Catherine.
Yeah, me too. It's wonderful when we get to educate first-time home buyers that maybe the first time around bought from the builder, or even the second time around bought from the builder, and now they're looking at a resale property. It's a completely different experience. Or if you've been in your home for 10 or 20 years, so many things have changed in terms of mortgage rules, in terms of how OREA, the Ontario Real Estate Board, is having us do things. So there's been a lot of changes. So this kind of information is for anybody, really.
Right. So Catherine and I were doing first-time homebuyer webinars. And what we realize is these mistakes are not just being made by first-time homebuyers, because when you're not looking for a mortgage, mortgages are off the radar. Nobody wants a mortgage. So once you get into your home, you're not going to think mortgages until you need one. And rules are always changing and the market's always changing. So it's really important to stay on top of the most common mistakes home buyers make and
100%.
Avoid them, of course.
100%. And so we're going to be giving this information. It's going to be free to you. You can look at it. You can review it. If you have any questions, you can put it down in the chat. We'd be happy to respond when we can. And this will be pre-recorded, so it'll be out there for you guys for all times. But you can always reach out to us directly if you have any questions about mortgages or purchasing a property here in Ottawa.
Right.
Yeah.
And we have our contact information on the screen there. So
yeah,
if you need our contact information, you probably find it in your description, Catherine.
Yeah, I'll get it. I'll get it there. We'll get it up there before, and we'll edit it in here and
right.
get up there. And honestly, we have referral partners. So even if you're not looking in Ottawa, we have partners from the East Coast to the West Coast, all over, and I'm sure you do as well.
Yes. So I'm licensed here in Ontario, but I have Quebec referral partners, and we have partners across Canada. So
yeah. So feel free to reach out if you do have questions. Even if you're not from Ontario or Ottawa, we'd be happy to help. So that being said, do we want to get into some of this material to help people avoid the most commonly made mistakes?
Sure. Yes. So this is probably the stage most people are at. Whether you're a first-time home buyer, you're deciding, is this the best time to sell, which we're seeing a lot of right now, rising interest rates. We're seeing people move out of the province. Is it a good time to sell? Is it a good time to buy? So we're seeing more and more stress in the market because of all the changes in where we're at right now.
Yeah, me as well. I'm seeing a lot of uncertainty where people want to make a change, but they're just not sure how to go about it, if now is the right time, if they're going to lose by making that switch. So information is going to help you whether you're planning for the future or if you're looking to make a change now or, in the next few months.
Right.
Yeah. People can be overwhelmed, confused, concerned, discouraged. There's a lot of things in the media that sometimes we kind of go, oh, why are they saying that? It's not true. It's not what we're seeing. Right. So the best thing to do is to reach out to your mortgage professional or to your realtor or real estate lawyer if you do want some clarifications, because sometimes the news can be a little doom and gloom. But we're seeing some, I know it's been slower compared to COVID, but that was rare. That was a rare time. That wasn't the usual time in the market. Right. So I feel like Ottawa has really held up in terms of home sales, and people are getting that confidence back with a couple of those rate reductions.
Yeah, and we are seeing home buyers, first-time home buyers even, get into the market. So yes, the news, of course, is often negative, and it's really important if you think that you might be ready, but it's about educating yourself, because a lot of buyers are ready to buy and they're just not aware of it.
Yeah, well, one of the things that's interesting is that, when we're calling through our leads and people who sign up, they're just kind of browsing. They want to buy something next year because they need to save up for their down payment. It's interesting because 12 months comes and goes really fast.
Right.
And so if you think you're a year or 18 months away from a purchase, the best thing to do is try to connect with professionals like us so that we can advise you, because it's going to be next year before you even know it. And there's things that you can do to plan, put in place, and prepare yourself, whether that's selling a home or buying your first property.
Right, absolutely. And getting your credit score up to par. So you want to make sure that if you have any missed payments, that you're set up on automated payments. You're not missing any credit card payments, getting your debt down, getting it paid, so your credit bureau is attractive to the lenders when you're ready.
Yeah, I mean, Dee Ann, what are some, like, let's say someone's got a fantastic job, they've been in it for a year or two now. What are some of the things that they can do if their plan is to buy next year, other than monitoring their credit score?
Well, number one is get your credit card set up so that you're paying your minimum payments automatically. So you don't even have to think about it. Ideally, you want to make sure that those credit cards are paid down fully every month to avoid the interest charges, but you at least want to get the minimum payment started. Also, don't buy a car. Those $400, $500 car payments can really eat out a chunk of your affordability when you're ready to buy. So I've had clients actually sell their vehicles to qualify. They Uber around or they use a friend or parent's car. And then once you get into your home, that would be the time to look at other debts.
Okay, and so the reason not to buy a car, a $400 or $500 payment per month, what does that take off of a mortgage you'd be qualified for?
Well, depending on the other debt they may have, that could right off the top take off $100,000 in affordability.
Wow.
So, for example, I have one client. He was paying $800 a month for his Ford F-150.
Hey, it's a nice ride.
Right. So he went down he could qualify for a condo for like $350 without the car payments.
Okay.
So it took him 6 months, but he did sell the truck and he came back with, an old car to get him around in the meantime. And yeah, he was able to afford and get into the condo that he wanted.
See, that just is like life-changing.
Yes.
Because even though you may not want to start in a condo or a condo townhome, to get your foot into the market and pay down that mortgage over the course of 2, 3, 5 years can then be the stepping stone that gets you into that home that you've been dreaming of.
Right. And it's, like we like to say, rent is 100% interest.
Yeah.
So if you're just holding back because, you're being told that rates are going to come down and you're waiting and trying to time the market, that can turn out to be a huge mistake. So if you have the down payment and the good, the income and credit score, there's nothing else holding you back. I highly recommend you just get in at your affordability point for now. It doesn't have to be forever home. Maybe a 3-year term is better for you than a 5-year term. Maybe a variable rate's better for you than a fixed term. So it all depends on your goals, which is why it's so important to talk to a mortgage broker and your realtor.
Yeah, right. I could go so many ways with this right now, but maybe we can talk about, people's goals when they come to you and they're ready with the credit score, they have saved up a down payment. What are types of products that for different people's goals that kind of you're seeing from lenders? Let's say like if you're a veteran or if you're military or if you're a single mom, are there products out there that can help people achieve their goals, Dee Ann?
Well, there are. Now, if you have a single income, it would need to be in the 100,000 mark. But if you have like 2-income family, or if you have 2 incomes of 50 grand, for example,
right?
So that will increase your affordability in this market.
What's like the minimum score? Like if someone is gainfully employed, they've got a bit of a down payment, they're willing to take a condo or whatever they can get into, but they don't have the highest score. Are you able to buy something with like a 600, 650, or what do you have to be?
So that would depend on the down payment. So
Mhm.
it all works together. So if they have more than at least a 20% down payment, then we can go with an alternative lender
Okay.
or a private lender. If they're putting less than 20% down, that may be a bit of a challenge with the mortgage default insurers.
Okay.
They like to see a score of at least 650.
Okay.
So some lenders will accept 600 score, but anything other than that, we'd probably have to go with a 1-year term with a private alternative lender.
Okay, so 650. So if you're at 625 and you need to get up to 650, how long might that take somebody? Like someone who's sitting at home listening to this thinking, "Oh my God, I've been working on my credit. I'm at 600 or 625. How long is it going to take me to get across that threshold to the 650 or 700 mark?"
Good question. It all depends on why that score is low,
Okay.
right?
Yeah.
So if there was a bankruptcy, maybe they only have one credit card. They don't have at least two trade lines. That's important as well.
Okay.
So was it missed payments? Was somebody going through a divorce and, the division of assets, money can be tight, they miss their payments. So a lot of factors there that will affect a person's score. However, the credit bureau, Equifax, for example, they refresh about every month.
Okay.
So your score can be significantly different from month to month.
That's good to know.
Right.
That's good to know.
So if you are having issues with your credit score, talk to a mortgage broker and find out what you need to do and what lenders may or may not consider to be a serious mispayment of some sort. So basically any phone or, internet conflict.
Yeah.
So basically any internet or telephone bill mispayment, those are ignored. So
okay.
not to be too concerned about those.
I do tell people, like, I know you're a year away or you're 18 months or 2 years, but you should still connect with a mortgage professional so that you can figure out a game plan that's going to work best for you so that we can get you there as soon as possible. So sometimes just having that initial conversation, like a consultation, the same way as when you reach out to a realtor based on a property, like this is a free conversation. This should be educational. If you're dealing with people who are up to date on the knowledge of what's going on in the industry, and it's what you want to do if your goal is to actually get into a property. You want to have those conversations early, gather your information early so that you can make the best financial decision for you and your family, and based on your goals as well.
Right. And it's not just about financial security. It's also about security. Like you don't want your landlord to evict you because they're moving in. So you always have that fear in the back of your mind, especially with a growing family, and your rent is increasing gradually here in Ontario. We have rules and rent control. However, for new builds, since
2018, right?
November 2018. That's right. There's no longer rent control. So that should be an incentive for investors to build.
Yeah.
If they want to rent out their units, but also, tenants should not have to worry about that. Yeah. So it's another reason to get into your own home, even if it's a condo. Take a 3-year term and use it as income property if you can meet the ratios, the affordability ratios. Yeah,
one of the things that I try to avoid, especially with first-time home buyers, because they've saved up this down payment, it's hard for them, and they're ready to get into a place. I do try to have the occupancy of the homes we're seeing either vacant or by the owner. I try to avoid properties that are occupied by tenants, but obviously I'll take them if the person is in love with the home online and they want to see it. But sometimes it's a challenge for tenants to get out in the time that, the new owner wants to take possession, or they can no longer afford the rents. I'm seeing ones that were paying as little as $1,200 a
Right.
month for a townhome. And I mean,
Yes.
now if it's like $2,700, $2,400 to rent a townhome. So that's a huge jump.
Right.
And some tenants just can't afford it. So I try not to kind of go to those properties as often, like I said, unless someone really loves it, just for the simple fact that even if they're served with the N11 or N12 and they're going to get out, sometimes things change. And on closing date, if the tenant hasn't left, now there's ways we can definitely protect them from the contract, from the point of view of your realtor should be able to protect you so that if the tenants aren't out on closing, you can get your deposit back and you can get out of the contract. It would be null and void. However, if you don't know that, and if you don't have a realtor that knows that, you could be stuck with a property where the tenant didn't leave, maybe not because they want to be spiteful, but they couldn't afford to leave, or they thought they had something, and then that tenant didn't leave, and it creates this chain effect. Right? So this is where having knowledgeable professionals on the realtor side really come in handy, so that come closing day, yes, it will be inconvenient for you, but it will be better than having to carry a mortgage where the tenancy and landlord board is all backed up. So it could take someone 6 to 8 months just to get a hearing, and then a few months more to have the tenant out. Can you afford to carry a mortgage for that long while paying rent?
Right.
It can put people under huge financial strain. So there are things like that to consider.
Right. And I've seen actual realtors put in a guarantee of vacancy on a tenant in property. So you can't guarantee that the place will be vacant. So it's really important to have that clause in there that the buyers can back out if the tenants are still there on closing day. And then that can open a can of worms. Everyone's inconvenienced. So I'm really glad to know that you're on top of the Landlord-Tenant Act and the rules and regulations so you can protect your buyers.
Yeah. And it has to be fair for everybody. And so that's why these rules are put in place. So let's see. Well, let's get into a bit of our slides here, talk about some of the things that someone might need. This will be for like first-time home buyers not knowing at all. Or if you bought straight from the builder, the rules are different in terms of deposits and things of that nature, or it's been very long since you've bought your home. So let's go through the list there, Dee Ann.
Sure. What are we looking at here?
Okay.
I may not list them
That's okay.
in order, but so these are some of the things you will need. I wonder.
Regular income. Maybe we can go into a little detail about savings or a gift letter for your down payment. What's a gift letter? Yeah,
so great question. We're seeing more and more of that. So a gift letter is a gift, as the term states, from a family member, a related family member. So we're seeing more and more parents take out lines of credits or using equity in their own home and helping out. It's really called an early inheritance. So we're seeing more and more of that. So parents are helping their kids buy a home sooner. We also refer to it as the bank of mom and dad.
The bank of mom and dad.
Right. So if the parents have the equity, that would be really important. We wouldn't want, the parents taking out a line of credit. And it has to be a gift. It cannot be a loan. So if it is a loan and the kids are expected to repay, we do have to add that to the applicant's liabilities.
Right.
Right. So it's really important that it is a gift. You will sign a letter attesting to the fact that it is a gift, it's not to be repaid, and it's coming from an immediate family member.
Okay. How about, let's talk about the differences very quickly about a pre-approval, a pre-qualification, things that people are going to be getting, and what does that mean for them?
Right. So a lot of people make the mistake of walking into a bank and getting pre-qualified. So the risk there is if the bank doesn't see your documents up front and you say, oh, I make $100,000, but maybe you just started your job like 3 months ago and you're still, on a 6-month probation. So that would be difficult to qualify you. Maybe more than half of it was commission. So then we would need 2 years of stated of income.
Okay.
So pre-qualification is just you and I talking. You're giving me the numbers. I'm on a calculator. I'm telling you what I think you can afford based on our conversation.
Just like a vague.
Right. So pre-approval is completely underwritten. So I would collect all the documents that I know a lender would require. I will scrutinize and create an income sheet to see what income I can use. If there's any part-time income, I can use a 2-year average. And I'm going to try to include as much income on your application as I can to qualify you for a higher amount.
Okay. And now I heard that you can use your child tax benefits, or if one of the people on title has is retired, like
we're using retirement, we're using pensions, we're using the Canada child benefit as well. If someone's on maternity leave, for example, a letter from the employer stating the date going back to work, we can use that income as well.
Well, that's good to know.
Right.
Yeah. Okay. So that's amazing to know. And obviously we're going to need a mortgage professional, a realtor, a real estate lawyer. And how about we talk a little bit about the closing costs? Because everybody really focuses on a down payment, but a down payment without your closing costs means you can't close.
Right.
And so that's not helpful. So let's talk a little bit about like what closing costs are and typically how much we're going to need in order to close on the transaction.
Right. So a minimum down payment to purchase a home is 5%.
Right.
Okay, so up to $500,000. So most first-time home buyers will save for the 5% and purchase a property under $500,000.
Okay.
So properties between over $500,000, the difference is 10% more of a down payment. So if the property is $600,000, you'll need 5% for the first $500,000 and then 10% for that additional $100,000 mortgage.
Okay. Yeah.
So most lenders are pretty good at requiring at least 1.5% to 2% for closing costs. So if they see, well, for example, if I see a client is really stretched as far as cash and may not have enough for the closing costs, if the client can use some of their line of credit without going over and above their ratios, right? So I will make a note of that to the lender that, they don't have enough for closing costs in their savings. However, they have enough enough line of credit. And they still meet the ratios. So the ratios have to be 39-44, which can be really confusing for most people. So I don't really get into that.
No, it's too much to get into. That has to be like a private conversation and really help them break down their affordability and what their ratios are and what that means for them. Now, at different ratios that are acceptable, does that affect the rate that they might get?
Right. So if you're putting less than 20% down, it's almost like you're applying for 2 mortgages. So the first one has to meet the criteria and policies of the mortgage default insurer.
Right.
And once they pass it, typically the lenders will accept it as well because it meets all the criteria. So if there's a greater down payment of 20% or more, there's more flexibility. However, there's not that mortgage default insurance. So there's more risk to the lender, right? So the rates will be a little higher. However, it's always best to put as much down payment as you can. If you can get past that 20% threshold, that's highly recommended because in the end, you'll save on premiums.
Yeah, okay. That's good to know. Okay, and so we're going to need home insurance. I always have people calling saying like, what is this? We're 2 weeks before closing and I have to set up home insurance. And they're like, yes. So I try to tell people in the beginning, once we have the accepted offer, all of the things that we're going to need: a home inspection. We're going to need, if it's a condominium property, we're going to need the lawyer to review the status certificate. And maybe if we have time, I'll get into what that entails. If not, it'll be another session. We can go into basically buying a condo. And then they're going to need to set up their home insurance before the lender will roll out the mortgage, right?
Right. So if they have a lawyer in place, as soon as they have a lawyer in place, they should reach out to their lawyer, letting them know that they've put an offer on this property and the financing has been approved. So I like to get the mortgage instructions to the lawyers a month ahead of time.
Yeah.
So like broker complete well ahead of time, so that if there are any surprises, and we've had a few with finance furnace companies being on title, that's a whole other show. So you want to make sure that you get home insurance registered on your mortgage. So for example, if your house burns down and there's a mortgage on it, the lenders want to make sure that they'll be paid out first. So that's what home insurance is. Default mortgage insurance is different, as is content insurance as well.
Yeah. Okay, let's see. So common mistake number 1, skipping the pre-approval mortgage.
Right. So getting a pre-approved mortgage that's completely underwritten, where your broker or mortgage advisor has seen all your documents, has inspected them, has inspected your credit bureau report. You don't want any surprises after you put in an offer on a home that you love. It's very competitive today. We've been seeing, well, especially during the pandemic, people were waiving their condition of financing and inspection, putting a great risk on the buyers. So you do want to have that condition of financing always, even with a completely underwritten mortgage approval. You still want to have that in there, but it makes our job so much easier because it's like a 2-part application. So I'm doing as much as I can right up until we have the subject property. Right. And as soon as your realtor or you send us the agreement of purchase and sale and the MLS, I'm able to complete your application, and should not take more than 5 days to actually get it approved by the lender. We typically have 10 days. But of course, you don't want to be waiting until the last hour to find out if the lender approved your mortgage. Now, if the lender turns down your mortgage, then I would need more time to find another lender. So that's why it's so important for me to know my client, know what my client's goals and needs are. So if I do have to move quickly for whatever reason, something comes up, they find something that, behind the scenes that I don't have access to, and they come back and turn down the application, it will be harder for the buyer to get approved elsewhere.
And here's the thing, Dee Ann, it's not always the client. It's not always the buyer. Sometimes it's the property that they're interested in.
Yes, of course. Yes. So a rural property compared, to a city property, if there's a well and there's a septic bed, those are all things as well that will impact your application. So being aware of which some lenders won't accept rural properties at all. So that's why it's important for me to know my client and know my lender. So I'm able to move quickly. I have access to over 30 lenders. So I know my lenders as well as I like to know my clients.
Yeah, that's amazing. That really helps.
How can you tell the difference between a freehold condo and a condominium?
How lovely it's manicured.
That's right.
The condo properties are always landscaped and well taken care of, and the things like windows and roofs get done collectively together.
That's right.
Yeah.
So a lot of people don't like condo fees because it adds to their monthly expenses. But there are advantages. So I challenge everyone, when you're driving down the street and you come across a row of townhouses, row housing, pay attention to the appearance. Like, are all the fences the same? Roofs are all the same? The last thing you want to go into a freehold townhouse, for example, is house poor neighbors, right? They can't afford to replace their windows, or they can't afford to replace their roof, or the landlord just doesn't want to invest that money into their property. They can paint their garage door a bright green or bright orange,
Where it's
right?
all beat in.
That's right. So that's one of the advantages of paying a condo fee and having a condominium board. So what a lot of people mistake as a condo, they think it's an apartment. So there are different types of condos. There are apartments, there are townhouses, there are even, I believe there's one here in Ottawa. It's
like a co-op or?
Yes. So it's kind of managed by a board. So it's a little different of a structure. That's why you'd want an experience.
Oh, like association fee with like the
that's
estoppel
right. We
certificate.
were talking about that last week. Right?
Yeah, you're gonna see it. Usually when you see the street that's circle or private, those are good. Like Paseo private or something, you see private at the end of the street, that's a good indication that it's an association fee, which essentially means that the neighbors collectively pay for snow removal, landscaping, sometimes garbage removal. They share that cost. It's usually between $100 and $200. It's not very high monthly fee, but then you don't have to worry about kind of cutting your own grass or having things look very beautiful and manicured. So those are also options. They're a freehold townhome, but there is an association and they do share the cost of that. So those things are great also. And another really wonderful thing about purchasing a condominium is that you can actually get yourself into the market. Right? So the price point between condominium properties and residential properties, there's an enormous gap. You might be able to get into a condo townhome for under $400,000, whereas the freehold townhomes, it's like you're looking at $550,000 and up, depending on like what you want. So, or even I've put people this year into condominium apartments, 2-bedroom, beautiful, well taken care of properties for under $300,000. Like you don't see that anymore, and that's really important, especially if you are a single person, or you've just gone through a separation or a divorce, or you're a student and you're going to be here long term, or you're a first time home buyer, or you're perhaps you're banned. Maybe you're a non-resident and you have to pay that speculation tax. I had a young girl and she purchased a condominium that was under $4,000 and they paid the speculation tax. Now, if you're purchasing something at $600,000, that becomes very unaffordable. So there are options. If you're on a work visa or a student visa and you're exempt from the ban, but you're not exempt from the tax, it makes it more affordable if you get yourself into a condominium that's priced a lot lower. So it does open the door to people who otherwise would not have been able to buy. Right?
We're seeing more and more new builds as freeholds now.
And that's true.
Yes, because of the appeal. People, and they're beautiful. So, that could be a concern down the road, right? 20 years from now, when the windows need to be replaced and the roofs and the fences and whatnot. And of course, it's personal preference. But don't shy away from a condo just because of the condo fees is my point.
Yeah, because some people say, well, I don't want a pool and I don't need all those things. I don't need a gym. I don't need that. But there's lots of buildings that don't have that have lower fees, but you're not going to have to be out of pocket for windows, which can be quite pricey. You're not going to be out of pocket for replacing the roof, which also can be very pricey. Like there are other benefits other than your snow removal and your landscaping to living in a condominium property that lets people afford a lifestyle while at the same time ownership.
Right. And I just want to point out, it's not to say that condo apartments will cover the windows, because we did have a special assessment on a condo. And that's why it's so important to have your realtor look at the certificate.
Absolutely.
Right. To see if there are any special assessments coming up. Right?
This is where having a good realtor with connections to great referrals. Real estate lawyers are the ones that will actually review the status certificate or estoppel certificate if it's an association. And this is a document that is going to talk about the financial health as of the condominium as a whole. Okay. They're going to review that. They're going to see what is in the reserve fund. And that's where some of those fees go. A portion of your condo fees go to a reserve fund so that if the underground parking or an elevator or windows or roof or whatever is covered by the condo corp needs replacing, that you have enough money. Now, sometimes mismanagement happens or buildings just age. Just like regular freehold homes, in age, things need to be done. Painting, replacing light fixtures, modernizing them in the common areas like lobbies and such. There's a cost to all of that. So if there's good management, if the building is relatively new, young, usually it's okay, but not always. So that's where you really want to talk to your realtor. You really want to make sure your realtor has a good referral for you, or you do your research on the real estate lawyer, because it has to be someone who's used to looking at those documents day in and day out, knows what to look for and catches those things. And it can save you so much time and frustration and money, which is especially as a first-time home buyer or someone who's saving for, it's the goal. Someone could be saving for their retirement. You don't want to get nailed with a special assessment, because I've seen ones on condominium buildings that have been tens of thousands of dollars.
Right.
And it's not just always the condo corp sometimes, or the management. Sometimes it's the board. Sometimes people that are on the board are inexperienced, but that's where you want to be like, what have you heard about this building? And making those inquiries and gathering information early and making sure that this is the right fit for you.
Right. And that will come up in one of our slides. Choosing the right lawyer as well that understands these certificates, how to read them in layman's terms. A lot of us don't understand what a special assessment is. And, you want to understand that your windows need to be replaced and it's going to cost you $10,000. And you also want to have options in place.
So talk to us about the importance of using a mortgage broker.
Okay, well, there are different types of mortgage professionals. So the banks will have banking advisors that can do mortgages. They have their mortgage specialists that work strictly on commission, and they deal only with the bank's products. A mortgage broker or mortgage agent level 1 or agent level 2 is regulated by FSRA. And so our advantage is that we can work with monolines as well as banks and credit unions. So we have a lot more variety for our clients. So I'm of the belief there's a mortgage out there for just about anyone with the right property and maybe 3 out of the 5 C's of credit, right? So a monoline is basically just a lender. So they don't take deposits. You don't see them at every, corner of every street. So they don't have the same overhead a bank has. So I've actually had people ask, well, what happens if they go under? What happens if they go bankrupt? Well, you don't pay your mortgage, right? so you might want to pray that, that they may not be able to collect on your mortgage. But of course, for the lender's sake, we don't want that to happen. So there are many top brands of lenders. We actually, I know of in my office, previous office actually, where clients refused to go with a monoline that was selected, that had the best product for them, the best rate for them, because they read online reviews. So, that's not necessarily a great idea if you read the reviews from other big banks and lenders. Most people write a review when it's really negative. We're not so motivated to write positive reviews, right?
That's true.
Right? So unless you're having problems, you're going to write a review. Otherwise, if it goes smoothly, you're not even going to think about your lender, which really is the goal until you're up for renewal, right?
Yeah. So the most important thing is to discuss your goals with your broker or mortgage professional, which they'll have way more options, and then they can come to you. Now, do you usually come to clients with more than one offer Is that how it goes?
So typically, we get calls. Hey, what's your best rate? What can you do for me? I'm shopping around with other lenders. I got 3 quotes already, and those quotes they shouldn't be taken seriously.
Right.
Because unless you've submitted all your documents and your application was submitted to the lender and approved. So once your application is approved by a lender, we're still, as a broker, I'm still shopping rates for them, right? So you have until, maybe 2 weeks before closing. If I do get a better rate, I can go back to your lender that we selected and request a rate
that they
discount.
Match it. Okay.
That's right. So, we have that negotiation power. Monolines are always, promoting special rates, and they have promotions, and, some may have cash back. So it's really important to work with somebody who's on top of all that for you. So it takes out the stress for you. If you walk into your branch, it's likely they may quote you the bank rate and give you a discount.
Right.
So there are a lot of issues with that as well. Should you need to pay off your mortgage earlier than the end of the term?
Okay.
So yeah, it's really important to work with someone who is listening to what you want and what you need.
Amen. And we're going to wrap it up there. Whether it's your lawyer, your mortgage professional, or your realtor, you do want to work with someone who's well-connected, is knowledgeable about their products, and listening to what your goals are for your home ownership. I hope this information was really helpful, guys. We're going to come back with more sessions. We're only touching the tip of the iceberg today. We could talk about this all day.
Oh, yeah.
Could we not, Dee Ann?
All long weekends, right?
And we do, right? We
do.
We geek out and we're talking about the changes. So we're going to get together every month, and we're going to be putting together more and more information, touching on these things. And if you have questions or concerns, put it down below. We will address them here. We love to educate our clients. It's why they come back to us. It's why we've both been in the industry for as long as we've had. So bye for now, guys. And, like, subscribe, follow.
Yes. Thanks, Catherine.
I know. Thank you so much. This is fun.
Wonderful.
It went by really fast.
It did.
I know, because this is what we do. We just get on the horn and start talking about these things. And it's like, we could touch on many more mistakes.
Well, we could talk for hours on one topic, right?
Really, yeah.
It's like trying to bounce and get our ideas around this topic now. And there's so many other considerations, right? It's like when you say something, it's like, but.
I know. Right? I can't wait till we get together with Michelle too, and he gets on here talking about the legal side of it, and then talk a little bit more about the real estate side of it. We focused a lot about, financials, but that's what people really want to know.
Yeah.
Like and that's what they need to know. So before we get to go shopping and get out there and have fun, they really do need to get all those ducks in a row and know what their options are, and know that they have those options.
Right. Yeah.
So I thank you so much for being here.
You really are a natural.
Come on, you're not so bad yourself.
No.